Join us this new year for new conversations at the Commonwealth Club.
Hello, and welcome to today's virtual Commonwealth Club program. My name is Ken Broad, and I'm a founding member of Jackson Square Partners, located right here in the Presidio in San Francisco. Our firm is a proud supporter of the Commonwealth Club and is pleased to underwrite today's exceptionally timely program with Ray Dalio, founder, co-chief investment officer, and chairman of Bridgewater Associates. Ray is a prolific author and leading expert in investment philosophy and corporate management. His latest book, Principles for Dealing with the Changing World Order, Why Nations Succeed and Fail, is a far more detailed and expansive perspective that materially furthers a topic Mansur Olson described 40 years ago in his seminal book, The Rise and Decline of Nations. Ray walks us through 5 centuries of economic conditions, political movements, and major shifts in wealth and the power of nations. He highlights the hidden patterns and provides insights derived from history to better understand and navigate the times to come. Moderating our conversation is the relentlessly inquisitive Sir Michael Moritz, a partner at Sequoia Capital. Just a quick reminder to our viewers, we will be taking questions and encourage you to submit those in the text chat during the program. Now, please join me in welcoming Ray Dalio and Sir Michael Moritz to the Commonwealth Club.
Thank you, Ken. I'm so excited to be here with such an interesting group of people. So I want to get some ideas out there and then turn to Michael, looking forward to our exchange and then some question and answers session afterwards. So, okay, to give you a little bit of background, for the last 50 years or so, I've been a global macro investor, which means in almost all the world's liquid markets, emerging countries, developed countries, and had to think about their economics, their markets, and their politics and everything else. And I learned along the way that the things that surprised me most were things that never happened in my lifetime before. And that in order to understand what's happening today and deal with what's happening today, that I need to go back in history. And I learned that first by studying the Great Depression. I was able to anticipate the 2008 financial crisis. I wouldn't have been able to do that if I didn't understand that dynamic. And 3 important things are happening today that drew my attention to the need to study them in the past, because what's happening today has not happened in our lifetimes before, but has happened many times in history. So that led me to study the last 500 years of history, particularly the rise and declines of reserve currencies and the reserve currency empires. And then I studied the dynasties since the Tang Dynasty, so around 600 in China, and I see these patterns. What causes the rises and declines, and as it relates to these things? So I have a few slides that I'd like to go over with you. First, what are these 3 big things that are happening now in a way that they never happened before? First, there's a size of big debt creations and then debt monetizations. In other words, central banks were running deficits, and central banks are buying the bonds, and financially is monetization of that. And that's having repercussions through the world in the form of markets behaviors and also inflation rates and that. So it's particularly important in the world's leading reserve currency. So that's what prompted me to want to study the rises and declines of these reserve currencies. The second is the amount of internal conflict, particularly over wealth and values gaps, the polarity, the development of populism on the left and populism on the right, and that type of conflict, which we see as almost irreconcilable differences. And that's nothing like that has happened in my lifetime. I like to measure things, so you'll see some of these measurements. And the third is the rise of a great power, in other words, China, to challenge the existing great power and the existing world order. And that's leading to external conflicts, which we're seeing play out now. And never in my lifetime was there such a power. The Soviet Union was not an economic power. Russia today, for example, has a per capita income of 1/12 of the United States and about the size of Italy. And in studying these cycles, these movements, particularly when those three things happen together, I also learned more about the importance of acts of nature. Acts of nature have actually toppled more civilizations and had more, killed more people and so on than any of the previously mentioned things, including wars. And they take the form periodically of pandemics, droughts, and floods. And then number 5, which is the most important over periods of time, is knowledge and technology advances. So what it looked like over time is almost like I was watching the same things happen over and over again. And then there's this evolution that takes place because of this knowledge and technology advances. So it almost looks like the same things, the same stories are playing out with the same characters, except they're changing their clothes and they're using the different technologies. So I'd like to show you some signs of that. I like to measure things. In the book, there are many measures, but I'll show you just a few of them here. So if you can go to the next slide, please. So starting with the debt creation and the monetization, the top chart shows debt to GDP for the private sector, total debt to GDP, going back to 1900. And it shows the dynamic, the one below it in the blue line shows the interest rate, short-term interest rate. And in the red line, it shows the printing of money and the creation of money as measured in the monetary base. And so you could see that when there's a lot of debt, and like in the first circle, and you go down, and there's the hitting of a zero interest rates, that form of easing ceases to exist. And then you get a lot of the printing of money, which causes the reaction. And that's, I mentioned that before, that studying that dynamic is what allowed me to deal with the 2008 financial crisis, which is the next line on the chart. You see the circle on top, high debts, hits zero interest rates, and then the large printing of money. And you see that come in 2 waves, that printing of money. And that passes itself through the financial system and through the economy in that way. So, and we'll deal with the consequences of that in the question and answer session. The next chart, please. These charts, the one on the left shows how big the wealth gaps are. The one on the right is how big the income gaps are. And so they're the largest since they were in the 1930s. So that's a source of conflict. And it's behind, of course, the populism of the left and populism of the right in terms of classics. You know, in the 1930s around the world, that played out in 4 democracies choosing to be autocracies in order to get control of those types of conflicts and the populism that's associated with that. And we have that. We see that in many different ways. And of course, that has the political dimensions that we'll probably talk more about in the Q&A, that even extends to the point of, are there such irreconcilable differences that we've lost compromise because no side is willing to lose? It's a question like in the 2024 elections, will any side accept losing, and how does that affect our system? So that I wanted to go back and study too. The next one, please. This chart goes back to 1900, and the red line shows Republican in the House and in the Senate. And it shows how conservative the votes are. The red line going up means more conservative. The line going down means more liberal, less conservative. And the blue line shows the same for the Democrats. And so what you could see is the gap in the values is the greatest since 1900. I had another chart, but I forgot to include it, which showed the amount of voting across party lines. And there's the least amount of voting across party lines, least compromise as there ever was. And so that also, what's happening now with this internal conflict made me want to study that. So next chart, please. This chart shows the rises and declines of different empires going back to 1500. I'm blessed by having a fabulous research team, and that we dig through archives and we formed different measures of power. I'll show you 8 different measures of power that we're looking at to help to construct these times. But they're an average of those measures of power to create an overall power index. And that goes back to 1500. And you could see, like the red line is China, and you could see when we started out there, China was at the top, and if you follow that along, you see the big drop in the power of China from just after 1800 till just after the liberation, as they call it, 1949, and you see that then since then the big acceleration in China, rise in power. You could see the Dutch. The Dutch were the richest, the next after that. And so you could see that arc in the orange line. And then you could see the British in the black line. And you could see the American empire in the blue line. And you could see then other countries, other empires at the time, Germany, Spain, which really represented the Habsburgs, and Japan, Russia, and so on during those periods of time. So we can clearly see the rises and declines of empires, and we could clearly see the very rapid rise of China as a power to rise to challenge each other's. And we also can see that in those crossover periods, there's a greater risk of war. There's been a history of war. Turn to the next chart, please. I mentioned that there are 8 measures of power. Actually, in the book, I show a total of 18 different types of measures, because in order to understand something and view it objectively, I need to see it through objective measurements. And these are of powers of education, innovation and technology, competitiveness in world markets, military, size of world trade, economic output, the power of the financial system, and the reserve currency status. And if you could see that, that almost tells the story of the typical rise and decline of empires. And they really measures more of health. You know, the more powerful you are, not only are they leading indicators, but they're measures of health. How strong are your exports? How strong is your technology development, and so on? So we can monitor those to see how our countries are doing and evolve that. And in the book, I show those numerous measures for 18 countries. I'd like to go to the next chart, please. The next chart, I'm just going to quickly take you through an archetypical cycle, which I call the big cycle of the rises and declines of empires or countries. So we can think of it as the big cycle beginning when the empire, or let's call it the New World Order, begins, and when it ends. And so what I mean by New World Order is I mean the ruling systems. And so archetypically, they come along after wars. A new world order is typically after a world war, and a new internal order typically comes after a civil war. For example, the most recent world order that we are now still in is the American world order that began in 1945 after World War II. And the last internal order in China the existing one began in 1949. So they, after the Chinese Civil War. And so these wars then determine who's got the power, and then they establish what the new order is. And the creations of these new world orders are typically followed by a period in which the new leadership consolidates power, and there is a rebuilding of education and productivity that brings about a period of peace and prosperity. And during this period, there is little or no fighting because no one wants to fight the dominant power. And people are so sick of the war that they want to get back to building good lives rather than fighting. And the wars then are also great equalizers that have redistributed wealth and opportunities. So the wealth gaps are generally reduced. And in this rise phase of the cycle, the empire becomes more productive and competitive in world markets. So its share of world trade grows and it becomes richer. And when its share of world trade becomes large enough that most of the global transactions are commonly in its currency is the common money that becomes the common money used, and that makes it a reserve currency, what we call a reserve currency. For example, when the Dutch were the richest and had the largest trading country, that led the Dutch guilder to become the world's leading reserve currency. And the same was true for the British. When the British became the largest and richest trading empire, that led to the British pound becoming the world's largest reserve currency. When the US became the richest and largest trading country in the world, that created the US dollar as the world's reserve currency. And now with China growing, it's beginning to become a reserve currency. So, and that also happens with the world's financial center. During this phase, these countries developed the world's financial center. So, for example, the Dutch, when they were on top, Amsterdam was the world's leading financial center. When the British were on top, London was the world's leading financial center. And when the US was on top or is on top, the New York is the world's financial center. And we are seeing China and its financial centers growing. So it's now the second largest financial center. And so that's sort of gets them to the top, and then it begins to cause the seeds for difficulty. So when a country's money becomes the world's most used money, people around the world want to save. So they want to save in that currency. So they buy debt of the world's leading reserve currency, which gives that country the exorbitant privilege of being able to borrow a lot of money, which contributes to its growing indebtedness. Also, as people get used to this prosperity and good returns on investments like stocks, they increasingly bet on it. And that also contributes to the borrowing money to bet on that. And eventually that sows the seeds for a financial bubble as a lot of debt is accumulated. That begins the top phase when the riches sow the seeds for the decline. As countries get richer, they naturally also become more expensive and less competitive, especially since after the wars, there is a rebuilding of the countries, which also learn from what the leading country is doing to become more competitive. For example, the Dutch were very competitive in shipbuilding that took them all around the world, and they would then collect the riches around the world. But the British then hired the Dutch architects and so on and build ships more inexpensively and become more competitive. And that helps to create the shift. Also, prosperity distributes wealth unevenly. So naturally, the wealth gap between the haves and the have-nots rise. So you see indebtedness rise and wealth gaps rise. And eventually the country has a lot of debt, and which can't be financed. It doesn't have enough money. And so there are deficits that are run. And just a classic part of that cycle is sort of the coffers are empty there, and then they print more money, or they slip money in, like the Romans put less gold in their gold coins. And that creates the dynamic of the inflation and so on, particularly if there's the rise of an external power. So you always see the economic problems and also the signaling, the printing of money as being a problem. If you have enough financial resources, you can buy practically anything, including mercenaries as soldiers in order to fight your wars. And when you don't have money, you're in trouble. And so let me give a couple of more slides just to paint the big picture before we get into other things. This next one just shows deaths from major conflicts, so wars over a period of time. This goes back to 1500. And the one on the right shows deaths from acts of nature, which is somewhat interesting, as also we think about climate change and how that might enter into the picture. But anyway, we've been blessed by not having much of those in our lifetimes. And then there's the last chart, which is of the greatest force. And that's next chart, please. That next chart shows the impact of technology or adaptation. All those big swings in these charts hardly show up. So if you look at the chart on the left, which is per capita real GDP, so that's a measure of incomes as a measure of living standards, and the one on the right shows life expectancy, what you can see is that there's that big upward trend, and in all of those, and even the big swings that we see in the other charts look comparatively small in relationship to those things, because we have the cycles. The bad times typically might last about 10 years and they barely show up. So that's the picture. So I wanted to take that opportunity in a few minutes to lay it out, some of the charts. There are a whole bunch of interesting charts in the book. And I understand, by the way, that you'll be given a book for free. So I hope you'll look through it and see it. But that's kind of it in a nutshell.
Tell us how you became a history buff. Was that something that you developed as a kid, or?
No, it was a necessity. I'll tell you, I was first time in 1971, I was clerking on the floor of the New York Stock Exchange in the summer. And on August 15th, President Nixon got on the television and announced that the United States would not pay its money in gold. Okay. It used to be that money only was gold, and paper money was like checks in a checkbook. And he defaults on that. And I figured, wow, this is a crisis. Money as we know it will cease to exist. And I went on the floor of the stock exchange where I was clerking at the time. And I thought we're going to have a pandemonium and a crisis. And you had pandemonium, but the stock market went up a lot. And I didn't understand. That was exactly the opposite of what I would have expected. And then I studied in history, and I found, I didn't know devaluations then. And I found that Roosevelt did the exact same thing on March 5th, 1933. And he got on the radio rather than the television, but he did the exact same thing. He severed the relationship with gold so he can print a lot more money. And that was the bottom in the stock market and so on. And I started to understand that. So in order to understand things that were happening in my lifetime, I needed to go back and study what happened in other lifetimes. And that's why I say studying the Great Depression helped me anticipate the 2008 financial crisis. So it was necessity. It was, of course, fascinating, but it was necessity that drove me to do it.
Well, and the rest of us are all the richer for you having gone on that personal exploration. Now, it strikes me in reading your book that, the three big themes of the book, debt and reserve currencies and the internal order of particular countries and then potential conflicts between countries could, in a way, in a contemporary setting, be a discussion about the two big global empires of today, the United States and China. And obviously, you're a deep student of history. I wonder whether, in order to begin the conversation here, you could talk about the significance of 2008 through your lens and about what that particular year taught us about China on the one hand and the United States on the other.
Leading up to that, I started to go to China in 1984, and I've been there. It's been an important part of my life since then. And since then, I would say I went in 84. Deng Xiaoping came in 1978. And then you had an open door policy and reform. And since then, per capita income in China has increased by 26 times. Life expectancy has increased by 10 years. The poverty rate of going hungry has gone from 88% to less than 1%, and so on. And we, over that period of time, in 2008, that's when we hit zero interest rates. And it had a lot of debt, a debt bubble. We've had lots of debt bubbles before, but when you hit zero interest rates, then you are in a different realm. So that was the first time of the printing of a lot of money and the creating of that gap. That also contributed to a wealth gap because mechanistically, and I'm more of a mechanic than an ideologue, what happens is when a central bank buys financial assets such as bonds, it gives it to an investor who then buys other financial assets. And so financial asset prices went up a lot, but there was not as much trickling down of that. And that also further contributed to the wealth gap. Of course, technology gap played a role. And that started to set itself up at the same time when China is more competitive and member of WTO and so on, that there was a symbiotic relationship with China in which we would buy their goods and they would buy our bonds because they were thought, like I said before, that that's the way to save. You own the bonds, but by lending us the money, by buying our bonds, we bought that. And then, of course, we had the combination of the wealth gap and the jobs issue that created the populism that really came to the surface largely with Donald Trump's election and has been carried through since. So that's how I look at 2008.
And Ray, in your trips to China in the aftermath of 2008, did you detect with all the policymakers and pundits that you meet when you go to China, did you detect any change in their view of the United States or their attitude towards the United States?
Not much. I had the privilege of being with them owning these bonds and not knowing actually they owned a lot of agency bonds, Freddie Mac and so on. And they didn't know whether we would default on those. And I watched them go through that. But they do know history. The Chinese, their religion is history, and they do know that sequence. It wasn't really, the change didn't arrive much from that. They knew to build their economy and continued on. The change, I would say, came more as populism emerged particularly, let's say, Donald Trump's populism more, and the now the broadening of a anti-China. Democrats and Republicans and most Americans are now more anti-China, and all of that together, I suppose, with watching what's happening now has affected. I think the threats. And the recognition that there are two different approaches to doing things. So there's an ideological warfare as well as that evolved more, I would say, in the last, particularly 10 years. Xi came to power, the Xi administration came to power 9 years ago, or almost 10 years ago. And they were mostly focused internally on how to do certain things like, again, reform their economy, make it more global, make more open up, develop financial markets, and then also deal with corruption, the big anti-corruption policies. And then we, of course, then had what we know has happened since.
As you contemplate China and have thought about it and continue to watch it avidly, what are the sorts of lessons that you would encourage Americans to take away from the China history of the last 30 years that perhaps we could apply here?
Well, the most important thing is to try to have people who haven't had much contact with China to actually understand what's going on and the motivations behind it. And it's not easy because the communications is not so good. But people who are there, like I think Sequoia is there or others are there, have some contact and to know that the Chinese are very practical people. And they'll this idea of things that are at odds, such as how do you have a communist party and develop the second largest capital markets in the world and create billionaires? How is that consistent? Well, as Deng Xiaoping said, when basically asked that question, he says it doesn't matter whether a cat is black or white as long as it catches mice, if it works, if the system works. And so what we're seeing now is things that are going on there that people may not understand, such as it's a top-down, more autocratic system, unlike the United States, which is much more a bottom-up system. And so things like I'll call them common prosperity or the dealing with a good example would be gaming. They want to control, make sure your kids don't watch too many games, spend too much time, and they control what's on the internet. Now, in the United States, they would say, okay, that's the role of parents and so on. But there are pros and cons to each because of what we're seeing on that. So tell us,
sorry to interrupt, Ray, but tell us about your view of, again, in your book, you stress the importance that the Chinese attach to long-term planning. And what are the consequences of that for the US, where the administration may change every 4 years or 8 years? Can you contrast that for viewers and listeners?
Yeah, there's an arc. The arc that I just described, in other words, a new order. What does a new leader do? He consolidates power, then you build the basic. And so there's an arc of an empire and a dynasty, and you do different things at different parts of that to get that. And so it's very true that they think in 5 year, 25 year, and even beyond, what that arc looks like, because they have so many dynasties that have gone through it, that they have studied that. And so that's their approach. I think is
that a big competitive advantage, do you think?
Oh, it's a huge competitive advantage. I mean, just thinking, where will we be 5 years from now? Now, of course, we have a different competitive advantage. Okay. But where will we be 5 years from now? Where will we be 10 years? The plan to put resources behind new technologies, So like the 2025 plan that was so controversial. And they measure their performance against that plan like a good business would. They have the metrics, and every 2.5 years they review it, and they fire the people who don't deliver it. And it's kind of like that kind of almost corporate management. What they lacked before and have changed is the creativity element. In other words, you have a plan, and you go according to that. What they've done with the development of venture capital and the capital markets and the ideas is to create a nurturing of that type of creativity, which was the thing that they would have lost. And so like they have a new program, which they call the Little Giants program. And the Little Giants program is to find in each of the provinces, like the best new ideas that have competitions. It's like Dancing with the Stars or something. They have these competitions and you find out who wins. And then they get venture capital money and you can privately invest in them. And then they go public in a new stock market in Beijing. So it's more like that. The United States has what I would say the great competitive advantage, which I don't think it's taking full advantage of, is that it's a country of immigrants in which we can draw the best and the brightest from all over the world, and they can be citizens, and you have rule of law, and you have intellectual property protections, and you can create a very, very creative environment. Of course, in China, they have numbers on their sides. The population is more than 4 times the size of the United States population. So naturally, as they raise their per capita income, if it gets to be half the U.S., then China is twice the size of the U.S. And so we have that dynamic going on too.
Let me dive into it, and I should encourage everybody on the call here to send in your questions as well, and I'll endeavor to include as many as possible. I'd be curious about your view on the level of education in China. And obviously there are vast numbers of people here, and I'm more interested in the absolute number of very well-educated people in China, particularly in STEM, than in the broader brushstrokes, and talk about the importance of how you see that playing out over the next 20 years.
Well, they turn out about 8 times as many STEM graduates as the United States. So the numbers are overwhelmingly in the favor of China. As far as the excellence of the universities, China only has 2 universities which are in the top 100 universities basis. So when we look at the statistic numbers of it, a lot more quality, a huge amount more quantity. The levels are improving in importance. The average level of an American education, the average American education in comparison to other countries has declined significantly. I think in PISA scores, it's something like 37th so we've lost a lot of, the average American is not very well educated, and the gap is not what it was. But the elite education in the United States for creativity, places like Silicon Valley and so on, is uniquely competitive in the United States. So that's how the complexion looks like.
Mm-hmm. Would you have programs? I mean, obviously, there are many students from China that come for further education, particularly graduate studies in the US or some of the better European universities. Would you have programs that you would encourage the US to commence, to encourage those sorts of people to stay in the US? Or?
Yes, a lot of Chinese who came educated sought to stay permanently in the United States and have contributed a lot along those lines. I know that the argument is of the stealing of intellectual property. That's a whole other argument, but it's also very difficult to retain and prevent that. And there's a question of a cost benefit. But I do, as I said before, say we are unique in being able to attract the best and the brightest in the world to be able to do that and to create those cultures. It's a unique benefit, which I think everybody would benefit from. But you have to deal with that in terms of the sense of intellectual property protections. Intellectual property protections have not historically, or even now, they're very difficult because of the nature of cybersecurity.
Ray, one of the things that you just touched on in both of the answers to both of my previous questions was immigrants and immigration and the influence of immigrants. In reading your book, I didn't see you place a lot of emphasis on that. Am I wrong about that?
I don't know. There's so many subjects. I think I made clear about that in the book. I don't know how many paragraphs, but anyway, let me be clear. That's the uniquely defining characteristic of the United States and one of the great advantages, I think.
Have any other previous empires benefited as much from immigration as the U.S.?
Not from immigration. The United States, I mean, of course, some countries, Australia, some countries have benefited, of course, from immigration, but what you see across dynasties, even if you were to see the Chinese dynasties, and it goes back really to Confucian definition of meritocracy, is that the creating the greatest opportunity of drawing on the broadest population has been integral to success. So if you see, for example, in the Sung dynasty, this goes way back, or back to Confucian, when they, you don't know where the best are going to come from, what part of the population. So to allow the greatest accessibility of that population draws the best talent forward, and it also creates a system which is fairer. And that is what you see through that meritocracy from wherever it comes from has been very, very, very effective consistently through dynasties and empires. The idea of moving from one country to another and what the United States could be as a home of immigrants was really more uniquely the United States being able to draw from the rest of the world. No other countries have done that so well.
One other question, and we have a lot of other things to talk about. We haven't talked much about debt and reserve currencies in the US, and I want to get to those. But I am interested in your views of demography and how the composition of populations in different countries, whether it's the US or China or Japan or Italy, perhaps, how that influences your view of the next 10 or 20 years for each of for these various countries where demographic patterns differ?
Well, demographics as traditionally, there are two dimensions. What is your working age population relative to your retired population? As the one is supporting the other, that can be more difficult as you move more into people who are not working retirement and have health issues. And how does that work? That's part of it. And then, of course, GDP, or economic activity total, is the number of people times the output per person. But it really so looking at those two levels, the real question is, what is the development of technology and productivity that replaces people? Because simultaneously what's going on is that sometimes we can have an issue that people technology is replacing people. And as it does, then that's a divide the pie. So some people can argue it's not anywhere a significant problem in an environment where technology is contributing to productivity by a greater amount. That's a divide the pie question more than it is a demographic question. So I think I would be leaning more in that direction.
Mm-hmm. Now, let me, as I mentioned at the beginning, and as you pointed out in your slides, debt and the issue of the reserve currency are enormously important in your mind as you think about what it is you do every day in investing. I think for many people, the idea of federal debt or reserve currency is a very abstract things. Can you put them in? Can you clarify the importance of both? For the everyday listener, really.
Right. I'll try. I want to describe the mechanics, the cause-effect relationship of it. So one man's debts are another man's financial assets. And when there's more and more debt, that either has to be paid back in, let's call it hard money, which creates an economic downturn. Just by the nature of debt, when you borrow, you can spend more than you earn. But then when you pay back, you have to spend less than you earn if it was not deflated. So when you're holding it, like we're now in a cycle where most people think that the amount of money they have, it determines how rich they are. And they don't think of that in inflation adjusted terms because they haven't had much of that. So think about it today. You get basically zero interest rate in an economy that has last year was 7% inflation, but might have a 5% inflation. So when you think of cash, one thinks, oh, that's a safe investment. You don't realize that you're losing maybe 5% of your buying power every year, and that's not a safe investment, and that's not a good investment. So the mechanics of this, we're now in the part of the cycle where they, put out a lot of money. There's a lot of checks, and everybody gets a lot of money, and everybody's happy about that. But of course, as people spend the money, prices go up, and then people are surprised by inflation, and they have a higher level of inflation. So as that tilts, it changes the willingness to lend. And also in the world, because the world is owning so much dollar denominated debt, because it is the world's reserve currency and they save in that, portfolios are heavily skewed to dollar denominated debt. Now, if those didn't want, they're going to have to buy a lot more debt because we're still going to have a lot of deficits and we're still going to have to sell that debt. And if they choose to sell that debt, and then you have to, not only the new deficits that has to be sold, but you have other debt that's sold, and that puts the central bank in the position of printing more money. So that's a very risky situation for both inflation and for the reserve currency status.
Are there any plausible alternatives today to the dollar as a reserve currency?
Well, the two purposes of a currency are a medium of exchange and a storehold of wealth. And as far as a storehold of wealth, you could see the run into all sorts of storeholds of wealth that have taken place because they don't want to be in cash. So you could see everything goes up in value. So the real estate, particularly also when you have such low negative real interest rates. The storeholds of wealth can be everything. The money, when we call it, is a storehold of wealth that can be carried around with you, go from country to country, unlike the piece of real estate. And now we're entering an era when there's the question of what are the alternative currencies? Is that a cryptocurrency?
Do you think it is?
I think we've entered an era in which everybody's going to look at alternative currencies, and not only crypto. I have a little bit of crypto, but I'm not. I think gold is better than crypto, but it's an alternative gold. But you'll have different currencies. Even the issue that we're seeing now with Russia being cut off from the SWIFT system can lead to China using its alternative currency, its digital currency, as an alternative currency. So you're seeing the role of the Chinese renminbi play a role of a currency, but currencies are the things that you take around with you that have a storehold of wealth, and they're taking NFTs can be considered as whatever it is. Diamonds and gems can be considered in a sense of currency. So there's going to be a competition between those types of currencies, I think.
Right. We're going to run out of time pretty soon. So let me lob a couple of audience questions at you, if I could. One of which was, can anything be done, Ray, to change the destiny of these big cycles that you write about?
It's basics, really. It's almost like the three big things. First, are you earning more than you are spending? Do you have a good income statement and a balance sheet as a country? The country is just the aggregate of its people and companies. So you have to do that. You have to be financially sound. And number two is you have to work well together rather than to have conflict that does you harm. Okay. So that's true of all countries. You need to do those things. It's not necessarily easy. How do you spend more than you earn when everybody wants more money? How do you get more productive? Your living standards, your power rises when you become more productive, but okay. And then, achieve that. All the things that are in support of that are great. Like education is one of the best investments that we can have. And we terribly neglect like public education in many ways. That's a great investment. You can do a lot there. But we have to work well together. And so that, at the end of the day, the country has got to be strong. It's an internal question mostly. Be strong. And of course, you have to support military, but that's an expense, and how you do that. And then I think, so item number three, you've got to have the good finances. You have to have the good harmony to work well together. And you have to not get in a war with a power that's going to mean the cost of that war is going to be great, which means that you have to put above all else how that is achieved. And if you do that, it's really not a problem, because if you think about today, we have more resources than we've ever had. Real per GDP, health, everything is better than we have ever had. And if we allocate that well and we are peaceful and productive together, that can be extended for as long as it lasts.
There's another question, speaking of debts, from an audience member, which is talking about what are your thoughts, Ray, on unfunded public pension liabilities, and what does the end game look for many states and municipalities?
It's a very big issue. It's if you take unfunded liabilities, not just pension, but you take healthcare liabilities and such, those unfunded liabilities are actually greater than the amount of debt in existence. So the promises to deliver are very large. And I think that it's very simple. They will either be dealt with by through taxes and redistributions to fund those unfunded liabilities as well as debt, or money will be printed and the reduction in real interest rates will continue. Over the last 20 years or so, real interest rates, in other words, interest rates in relation to inflation, have fallen by 500 basis points, 5%. And I would expect that you're going to see more of that take place, just sort of the way that we saw it take place before. So I think that that'll be the way that it's likely to be dealt with, because the issue is defaulting on those. And if there's defaults on that, that produces depressions and political problems. So I don't think that that's realistic. So I think they're big. I think they're an issue. I think that they will be dealt with by printing more money, because if you're owning a liability, there's only a certain number of dollars you have to give, and dollars can be created.
Ray, we have time, unfortunately, for just one more question, which is this. Reading your book, it's fairly easy to conclude, perhaps wrongly, that you believe that the US is in a period of irreversible decline. First, is that assumption correct? And two, if it is, what can be done to arrest it or change the trajectory?
I have a belief that if nothing's predestined necessarily, if, like I said before, if you worry, you don't have to worry. And if you don't worry, you need to worry. And what I mean by that is if you worry about these things, that will probably cause compensating adjustments to be made so that we would worry less about them. And if you don't worry about them, that's really scary because this is worrisome. These issues are worrisome. But as terms of what needs to be done, you need to get those things I said before. The thing I look at for every country is how are its finances doing? Do you earn more than you're spending and so on? Second is, are you civil with each other and work well together? And third, are you at risk of an international war or not? And if you can handle those things, you're going to be okay.
And today, are you feeling more optimistic about the United States than you did 10 years ago, or less optimistic?
Much less. We followed the path, the arc that is very typical, and the populism that we're now having of the left and the right means that there's good chance there are irreconcilable differences, including even in elections. I could imagine a situation where in the next presidential election, and not just for the president, for all seats, that there will not be an acceptance of losing. It's a win at all cost. And if that's the case, it's like sanctuary cities. When the federal government says, here's the rules, and then you say, I may not obey those rules. There are Supreme Court cases that are coming up, and already they're being looked at in a political light. Possession of guns, Roe versus Wade, those kinds of issues, when the people believe that the system is so politicized that there's not that balance and objectivity, they could fight at all cost. So I think that we can say, when I use these measures, the reason I have these 18 measures in the book, and by the way, I'll update them every year so you could see whether there's improvements or not at a website called economicprinciples.org. I'll show you those numbers. You could see whether they're improving or deteriorating. And by and large, these issues have been deteriorating.
Well,
I think we see it around us. But the measures help because you could actually see it in the numbers. But no, is there more harmony? Are we working better with each other? Are our finances better? No, they're not.
And if you had to pick one country, only one country to invest in for the next 10 years, one was China, one was the US, where would you invest?
I think that particularly, first of all, I would be in both of those countries, because in both of those countries, in terms of major technology and innovation decisions, they're likely to come from both of those countries. And I wouldn't be concentrated in one or another because I don't know who's going to win out in these various tech wars and other things, but I would be there. But I would not be so overly concentrated. I like Singapore and the region in the that area of the Southeast Asia area. I like a little bit of exposure to India, but that's particularly Southeast Asia. And again, I use those three criteria. How are they doing financially? Are they civil with each other and the system working, or do they have a risk of an external war? Those are the criteria I use.
Ray, I think we could certainly in California time go on chattering away, at least I could very happily for the rest of the afternoon, but our program, unfortunately, has come to a close. So our thanks go to you, Ray Dalio, founder, co-chief investment officer, and chairman of Bridgewater Associates, and most importantly, author of The Changing World Order. Thank you so much, Ray.
Thank you, Michael. Thank you all.